Hello, everybody. Welcome from my side as well. I think I finally made it to the first panel of the day in a crypto assets conference after 4 or 5 years of this conference and afternoon sessions. I'm now in the pole position. I hope not to mess it up now, otherwise you will never see me again here. We're all in a good mood, you've seen, so hopefully this stays over the whole day. We want to talk about the future perspective of the European landscape on digital assets, not to say German crypto assets always. Maybe a quick start with introduction. I would like to start first with Alexandra Hachmeister from Deutsche Bank to briefly sorry, you can first.
The central bank, actually.
Sorry, Bundesbank. Quickly, please tell us a bit about your field of interest and occupational background.
Good morning, everyone. To be very precise, Deutsche Bundesbank, so the central bank side of this. Although I have spent many years, actually more than 2 decades, in the private sector, and you will have realized that I have worked with the institution that just, held the keynote. And my interest at Bundesbank, and I joined the public sector a bit more than 4 years ago, and my interest and responsibility is basically the future of money. And that is on the retail side, the digital euro, and on the wholesale side, it is wholesale CBDC.
Thank you. Maybe we can go over to Marat first, to go to backwards. Marat from the critical side, say, the rating agency.
Yeah, so we are from the risk side, actually. So I work for Moody's Ratings, a rating agency. We've been rating digital bonds, funds. Now we can rate stable coins and other crypto-rated products. So this is why I'm here, to talk more about the risk side of infrastructure and these assets.
Thanks. And Akash from Banco Santander.
So I work for Banco Santander. It's the biggest bank by market capitalization in Europe. The biggest in Spain, of course, and we focus very much in my area, which is corporate and investment banking. We focus in tokenization, both of assets and cash. But my interest, which you asked for, are as well in cryptocurrencies and how it can transform digital markets as well.
Thank you. Mykolas, welcome as well. I suppose you're interested in crypto assets and digital assets and cryptocurrencies as well?
Sure. Perhaps my story is exactly the opposite of Dr. Hachmeister, who spent 2 decades in public sector and moved to 2 decades in the private sector and moved to the public sector. I've moved to the dark force. I've spent a decade in public sector and moved to the private sector. I'm Lithuanian. But I'm based on the plane economy class. I fly to different places, meet governments, and my day is basically divided in 2 parts. First part of the day, I speak with governments and regulators trying to explain what is crypto, and then the next day I spend talking to crypto, explaining what is regulators. So this is mostly what I do, and at Bybit we're the 2nd largest global exchange, and we're very pleased to be here.
Thank you. Maybe this is one task of ourselves, not to tend towards an expert talk only, and try to let the audience participate in what you're actually thinking and saying. Yeah? So last but not least, Christoph.
Christoph Hock, I'm head of tokenization, digital assets, representing the buy side. So I work for Union Investment. Additionally, I'm chairman of the task force tokenization. We have had a pharma, that's the European buy side collaboration. I'm also chair of the DLT bonds working group at ICMA. ICMA is the biggest global trade association we have. So important for us, it's really to participate in building new rails for financial markets, new token economy in financial markets with benefits from the investor's perspective. So the most important for us is not implementing technology for the sake of technology, but really to ask them the question, which problems is it we want to solve? What is it what we want to set up, define for our investors, institutional and retail investors, really to be able to deliver best-in-class services also in a world full of digital transformative processes.
All right, thank you. So maybe to catch up on the keynote of Thomas Burg, he said we are on a first mover advantage. So the EU regulator already set the scene, so to say. We have the DLT pilot regime, we have MiCA, of course. Now we have the market integration and service package draft that also addresses digital asset aspects. And to a certain extent also tries to bridge the gap between traditional assets and digital assets. And that's an important part also in the more traditional market infrastructure. And coming from this regulatory angle, my first questions to all of you is, as we've heard in the quick poll, you're all convinced about the future of digital assets in the mid to near future. What specific kind of digital asset would you say is one of the key drivers? Mykolas, please.
I think it's very important to realize that we cannot analyze Europe in silo. What's taking place overseas is hugely impacting Europe and specifically digital markets and different products. And as European, I'm entitled to complain about Brussels. A little bit, not too much, but daily. And when we hear Brussels building regulatory sandboxes, US is going straight for the beach. And when we look at the initiative from New York Stock Exchange, we look at initiatives from NASDAQ, we look at what's happening with stable coins, we look at the venture capital market investment into crypto industry, it's all US dominated. And we cannot analyze of what will happen in Europe without taking effect of what is happening in US, and that is specifically on the tokenization. When we look at the regulatory sandboxes and the DLT pilot regime, it has limitations on products, scope, on capacity, even on time. So, for example, if you're building a DLT pilot regime-based company and you're going for a source of capital, your investors will ask you, so what will you do in 6 years when the regime expires? Because there's a limitation on it. You don't have that in US. So I believe that the tokenization will be hugely impacted by what's happening in US. That's number one. Number two is China. But we haven't heard from Dr. Thomas talking about China and Asia, but if you look at the 10 largest global crypto exchanges, 7 of them are actually coming from Asia. None of them from Europe, really. Asia is a huge driving force. And what's happening in China, so we see exactly the opposite of what US is doing with the private stablecoins. China is going for the public CBDCs, and will be using that to settle the tokenized markets in Hong Kong. And that's their very clear direction. So Hong Kong will be a clear gateway for tokenized markets, and you'll be able to acquire Chinese stocks on Hong Kong tokenized. That will also hugely impact how the tokenized markets will be shaping here in Europe. And the last thing as well, we tried to, in Europe, to decouple from politics in US. And we want to sometimes nothing to do with it. But in reality, the midterm elections will also have a huge impact on how the crypto market develops. Because now we have a Genius Act, which has been passed, with a great impact on the markets, on the whole dynamics, stable coins. But the next stage is Clarity Act. It passed the House, the Congress, now it's stuck in the Senate. If it's not passed by the terms of, by November midterm election, when possibly the Congress will flip, the reality may change significantly. So we have to bear in mind these global effects that are making impact on European market, and specifically I believe the 2 elements will be key. One is tokenization, tokenized markets, and 2 stable coins.
Right, thank you. I quickly wanted to take on the picture of sandbox and beach. Is it also the mindset difference? Europeans are afraid of the big waves that might take. The US is taking a surfboard in case of a big wave. Might this also be an aspect? And Alexandra, you want to reply?
Well, I'm not a surfer, I have to say, but I'm very convinced that we're doing a great job in Europe right now. And I hear your points. I hear that, you know, the US and what is going on in Asia, everything that's going on around us will, of course, have a strong influence on us and on what we do. And that holds true for geopolitics. That holds true specifically talking as a central banker about the relevance of the different currencies. What are we going to see in terms of the relevance of the US dollar going forward? Because there is a political agenda behind it when it comes to stable coins. How do we look at it for the euro, for example? So obviously there is this relevant big picture that we have. But let me take just one step back. I think, yes, I agree with you, the DLT pilot regime was particularly designed more as a sandbox and to get started. However, if we look at the MISP now, obviously we're trying to, you know, work on those flaws. But I think, nevertheless, what it provided was really a foundation for innovation. And we just have to make sure that we are talking about sustainable innovation now, right? As I agree with you, it's not a good idea to start something and say, okay, we tried something, well, let's leave it now. And I give you an example. And I think we have a beach, actually, and we're looking forward to it in autumn. And the beach is what we have done with regards to wholesale CBDC. We have done exploration not with funny money, but with real money. We have done settlement in more than 1.6 billion in wholesale CBDC DLT-based transactions through exploration. And what we're doing now is in a strong joint effort, particularly between public sector and the market, is to take on the next step. And we will be in production this year. And that is actually pretty fast. And I particularly liked one point that Thomas was highlighting, and that's the topic around market integrity. Because there is a relevance, and I know that's a bit of a leap in this room probably, bear with me. If we talk about the relevance of currencies, and we talk how the US is using stable coins to promote its own currency, then it is for us even more important to promote wholesale CBDC and at the same time also other private money forms such as euro-denominated stable coins, tokenized deposits, and we will see the whole plethora of instruments. So I don't buy the whole story of, you know, Europe is only going public sector and the rest is going private sector. We're definitely going a hybrid model here, and in our world, both should basically be strong complements. And I'll leave it here for now. But
I have to react, if you don't mind. Now, having said some criticism about Brussels, of course I have to say some good things. Again, being European and enjoying the benefits of Europe. And as you mentioned, the hybrid model, and particularly as the public sector in EU has realized the digital euro, which, Madam, you are, the CBDCs have a huge impact on the wholesale market, and much more than the retail. And the important element there, that there are, if we look at the tokenization of European capital markets, there's no private issuer of stablecoin that would be able to serve those markets and to settle that amount of transactions. It's only wholesale government money. The CBDC is the only tool here today that would be able to support at-scale tokenization of equity capital markets. So it's a really good thing that we see now from public sector, having this initiative, realizing the benefit and the true angle of the CBDCs. And I think this is a great thing. Thank you.
Maybe I can also jump into this discussion. I think in Europe at one stage we should really stop with believing we are less relevant compared to the Americans. I guess when looking at our journey we've had in the crypto and the digital asset world, point number one, regulation. I think we've done really a fantastic job. We've been first with MiCA, which was implemented years ago. Looking at the Americans, what is it what they are doing now? They are trying to grab the best pieces of what we have in MiCA and to implement it as a part of their own legislation. Point number 2, when it comes to digital assets, I think to start with, the DLT pilot regime and the equivalent we have in the UK, the Digital Security Sandbox, was exactly the right thing to do. And again, the Americans with Clarity Act, they are 3 years late compared to what we did in the past. And sure, they can remove potential mistakes we've done, looking at thresholds, looking at the parallel world of DLT MTFs and traditional MTFs. But from a reg perspective, I think in Europe we did a great job. Also looking at market infrastructure, Thomas was alluding to. Deutsche Börse, it's one of the biggest traditional exchanges we have globally. They go full digital. Is it in the post-trade world? Is it also in the trading world? So going forward, we will have the opportunity to trade tokenized stocks, tokenized bonds based on the inventory of Clearstream and also of Euroclear. So a similar step DTCC has done. So therefore, my key message is in Europe, we are not the laggard, but we have really fantastic potential as a private-public partnership, and I'm sure that we are close to the inflection point. Thomas mentioned close to the kind of ChatGPT moment for DLT, and we will see a massive acceleration over the coming month. And last point, Alex, looking at the digital payment side, I think what the ECB and the leading central banks as a part of the exploratory phase, Deutsche Bundesbank, Banque de France, Banca d'Italia, what they did during the exploratory phase in 24, the consultation with the market, and now with the go live in September of wholesale CBDC, that's something we haven't envisaged from a global perspective. So having this variety of digital payments going forward, on the one hand, the public payment with the ECB as a stability anchor, and on the other hand, the private elements with tokenized deposits and with stable coins. So I think we are on an extremely good path here in Europe, and now we really should collaborate to go into an acceleration mode.
Thank you. Marat, from a rating perspective, you see two worlds, the private and the public focused world. What's the pros and cons?
Well, I guess interesting points. I would like to share some observations from us as a rating agency. And obviously, we don't trade stocks, right? So I will not comment on the stock part, but main points of tokenization is digital bonds, funds, and now stable coins, so digital cash. So on the bonds, Europe was leading for many years, right? It was followed also by APAC because there are some strong regions there, like in Singapore and Hong Kong. They're issuing a lot of bonds. Even government of Hong Kong is issuing digital bonds. But Europe was leading. Especially what was pushing the issuance was the ECB trials, right? We've seen significant uptick with ECB trials, also followed by Switzerland, where they were testing the CBDC as well. The funny thing that when trials ended, there was a pause. There were no issuances in Europe, and obviously you see a very strong correlation with that. But now we see issuances also in US and in Canada and also in LATAM, so they're starting to catch up with that. So again, it's still leading, but we see growing issuances there in that regions. In terms of fund tokenization, I think in Europe we're a bit down, but it's also for historical reasons. So this is not very popular in Europe, right? It's more popular in other regions. So here I would say they have some advantages. In terms of stablecoins, well, obviously we all know that US denominated stablecoins are leading the market. They have the highest market cap. But look, 90% of the stablecoin usage is still crypto trading, which is potentially not relevant for us as mechanisms to settle transactions. I think only around 3 or 4% of stablecoin usage is really settling the transactions. So just to give you perspective on that.
Okay, we will catch up on stablecoins if we have time later. Akash, Banco Santander is a major European player. we've seen the technology will work, it will all be great, but why? What's the economic perspective? So 2 questions. The 24/7 availability. What's the gain for someone who actually has to sleep and maybe wants to have a weekend? The first question. And a second question, what's the benefit for the real economy as well? We're talking about financial market professionals, that's fine, but is there an actual gain for the European real economy?
So I feel the benefits can be separated into 2 buckets. The first one is wholesale. I feel that wholesale gets the most value out of tokenization compared to retail. Actually, that's the move I made. I was working for another bank, which was focused on retail, and I moved to Banco Santander because the focus on tokenization of assets and tokenization of cash, both for the bank and for corporate clients, was a key part of what they were working on. And so I moved there. And I feel that the immediate benefit in wholesale aspect of tokenization is collateral mobility. What we are seeing there is that the biggest players, tier 1 banks, they are not just building the infrastructure for collateral mobility, but as well participating in others' infrastructure. So why are they participating there? Because it makes sense from a business case perspective from day one. You get into those and you will start paying less interest rates for the repos that you make in these infrastructures. Because right now, if you make a repo with another bank using traditional infrastructure, you pay for a day of interest. Right now, if you move here to these infrastructures, you can just get the liquidity, I don't know, for example, to settle FX on CLS, which is time-based, for 2-3 hours, and you just pay for 2-3 hours of that liquidity. And if you are the repo buyer, you can just lend that liquidity many times over the day. So you can charge more for these few hours, but you will have the collateral to lend it to other counterparties intraday, overnight. So I think collateral mobility on the wholesale aspect, it makes total sense, and I feel that it's the biggest value proposition. And then on the retail side, tokenization, I think it brings more value on the cash side. Actually, I have a story. I was living in Argentina for a month and a half. And so I went there with, of course, my card. As you travel in Europe, right? You can pay with card anywhere and so on. So when I went to Argentina, there were a lot of places where you either pay with Mercado Pago, which is national and you cannot get it if you're a foreigner, or with cash. So I had little cash. It was spent within a few days. And so I had no means to pay in some places, and in others, I was charged like 5-10% surplus on the transactions. And so I thought maybe there's somewhere that they accept stablecoins. They don't on a point of sales. But there are places where you can exchange that. And so being an European in Argentina with no ticket to travel back and get cash and go there, I just got into my exchange, withdraw stable coins, and have cash to live for a month and a half there, right? And so it brings a lot of value on the cash side, for not just for us, you know, that for other countries that have a weak currency, it makes total sense to have the US dollar, for example, or euro coin, which has grown a lot since MiCA, in their wallets in order to be protected from their weak currency.
Can I just a bit of decentralized governance, if I may, just hijacking your position for a little. This reminds me of some good stories traveling around different conferences in Europe. And a few years ago, and a year ago, we've seen a lot of original crypto companies talking how they will be at the table disrupting traditional finance like never before. But in reality, most of them are actually on the menu as traditional finance is slowly eating them up by offering crypto services, or what we're seeing right now from Banco Santander, even to the most conservatives like Danske Bank. So banks are moving into the crypto sector by offering products, and the only way to earn a place at the table for crypto companies is to go back to the drawing board and start building new products and new services, the real case services and products that would serve customers. And that brings to something that Christoph and Thomas mentioned, which, again, for entertainment purposes, I won't necessarily agree. Mika. Mika is yesterday's news. Everybody has Mika. And Mika is not enough to serve clients in full purpose. You have to have electronic money institution license. You have to have MiFID license. More likely in the future, you'll have to have a multilateral trading facility license. And I believe that this is a very important step for us to realize, especially for the crypto companies, that in order to serve customers, we have to be regulated, and Mika is not enough to be regulated, and we have to be serving clients with new products. And then when we go into tokenization, and we had this wonderful discussion with BaFin representatives and at Crypto Talks recently, where the discussion was very open. When we now talk about tokenization, in many instances, and great products we heard in this morning, but those are digital wrappers. Don't represent the real, true ownership in most cases, right? You don't own the stock, you don't get dividends, you don't vote. It's not real. It's a digital wrap. It's great. It's great to have it. It's a great product. Many retail users don't really care about the counterparty risks there. But if we want to really scale things, we need to think about the proper DLT regime and the tokenization that reflects the true ownership. And I believe that this is where actually we should be going.
Thanks. Maybe to stick to the question of what do I actually have in hand? If I take my banking app, it looks like I have money on the phone. Of course, I don't. It's just mirroring whatever bank's account. Christoph, very practical from an investor perspective. Fiduciary duties also. What do I get if I buy a digitalized security? We said if it's just mirroring or securitization of something else does not really bring any benefit. So what's the triggering moment for an investor to actually engage heavily into securitizations of digital assets and taking the current niche market? If you buy all the digitalized securities you have in Europe, you still have money left. So after the infrastructure is built, where's the volume, the masses coming? Why are the issuers waiting?
I think when we're looking at tokenization, and SEC, they brought a paper by the end of Jan out talking about the various formats of tokenization. It's important to differentiate. So on the one hand, you have issuer-led tokenization. That's, for example, when a KfW or Siemens, these were issuances where we as union participated, when they come with a DLT native bond to the market. So that's issuer-led. On the other hand, you have third-party-led tokenization, and here you have to differentiate between tokenization via the ICSDs, DTCC, Clearstream, Euroclear. And these guys, they have a kind of physical global document sitting in their vault, and then on request of investors, they have the ability going forward to tokenize part of this global physical document. So to say, to set up a shadow wrapper with exactly the exposure you have when being in a physical global document securitized security. And the benefits obviously are you have much speedier transfers. Also, we talk about near instantaneous settlement. You have the 24/7 ability to trade. You will have, when being in a scalability mode, significantly lower cost embedded to a tokenized security compared to a traditional one. And also with a shorter settlement cycle going hand in hand, you have less risk as an investor. So that's the ICSD-led tokenized product. And then what you were mentioning is the third format, that's a third-party platform-led gimmick called tokenized security, tokenized stock. That's actually an SPV, special purpose vehicle, so when I go to Robinhood, purchase a tokenized Tesla as a retail investor, they set up an SPV, they purchase a traditional Tesla in the market and they put it into this wrapper of an SPV. And that's exposure as a retail investor. I'm not sure whether you want to have this. You have a tokenized stock, yes. But on the other hand, you have counterparty risk against Robinhood, what you probably do not want to have because you want to just have the Tesla exposure. You might have disadvantages when it comes to dividends and also SEC lending proceeds. So therefore, I think for an investor, it's really important to look what the investor gets when getting into a tokenized stock. And Thomas mentioned in his keynote wallet as the kind of digital holding format, a digital app going forward to have all your tokenized DLT-based securities, cash. I think that's just user convenience. So when looking in certain jurisdictions, just take Africa, just take South America, where you have a very high rate of unbanked investors. These guys via wallet, they easily can invest in products and they can transfer money. And also, we are all used to smartphones. Going forward, you will have a very easy to manage front end where you have all your positions, regardless whether it's tokenized fund shares, tokenized securities, tokenized cash in there. You have easy transferability, so significant benefits from a retail investor's perspective, but also from an issuer's perspective when looking at tokenization. What we didn't discuss in detail is, I don't want to dig too much in this topic, is programmability of assets. At the moment, the format of securitization is a pile of paper. Going forward, you have programmable assets where you can easily manage payments like coupon payments, payment at the end of maturity. That's in a highly automized way can be much better administrated than today's processes.
Thank you. So maybe just to sum up quickly, when we talked about, or started talking a few years ago about what's the benefits of blockchain, DLT, and DeFi, it's about the disintermediation. So maybe to conclude what you said, it's also the disintermediation between what do I see and what do I actually own, as what you said. Wrapping is nice for wrapping purposes, but you don't want to keep the wrapping paper just for the sake of having nice shiny paper. You want what's in the box. Yeah? And as long as this is a long chain, it's inefficient, and also the rights entailed are less valid. Considering that we are in the final minutes actually already, and I think the most interesting political question also with the US dollar pegging of stable coins in the European perspective, I want to spend the remaining minutes on this issue. And maybe Alexandra, you want to start. Why it's not the worst idea to have ECB or a Bundesbank as an issuer compared to some kind of privately owned company issuing money?
I think you answered the question, right? Some kind of privately, no, I'm not going to go there. I think what is important to understand is that when we're talking about stable coins, the word stable can be an indicator or not. Stable coins do have an underlying, and most of the underlyings are pegged to a fiat currency, actually. So there is no stable coin without the world of public money, to be clear. And I think when we look at it, and I'll take one step back, give me 1 minute. In today's world, we have central bank money and commercial bank money, right? When we all go on the digital asset side, what we need is appropriate instruments, again, in both worlds. So this is why we do wholesale CBDC, and this is why on the commercial banking side, we are going to see tokenized deposits, stable coins, etc. Right? So, and we discussed that. It depends really on the use case. What is the appropriate instrument for what use case? The appropriate instrument when it comes to large financial transactions, and that is globally agreed, is central bank money, because it is basically the riskless settlement asset that you have. So obviously, it is our clear task, if the world around us digitizes, that we deliver this instrument also in a digitized form. This is why we do wholesale CBDC. Do we think that in use cases where today stable coins can be very valid, that we do have a role to play there? Probably no. What we want is a good regulatory framework, a proper governance, because that's what you do, ensure that we measure risk right. Is there liquidity risk? Is there run risk? Because ultimately, when it comes to currencies, we want to make sure that we have stability and integrity of the system. And one last aspect to that. When it comes to, and you've pointed that out, that what we see in stable coins today is very limited to one market segment. Right? There is a big attention and agenda from the US behind it to get a true dollarization. And this is where we then get concerned, right? The euro is the second largest reserve currency. The fact that we can do monetary policy and have effective transmission mechanisms is also back to the fact that the euro is relevant. So, of course, we have a strong interest in ensuring that that stablecoin issuers do not get too dominant, in particular not when it comes to European transactions. I'll leave it here.
Thank you. Marat, yeah.
I guess I would comment again from the risk perspective. I totally agree that wholesale CBDC would be risk-free asset for settlement, right? And then there will be probably a debate between tokenized deposits and stable coins, right? And tokenized deposits very much linked to the banking institution that provides the service. So we rate traditional deposits, potentially it will be very close to what we do right now. But stable coins situation is different. And I think there is some misconception that regulated stable coins are great. In our view, even a regulated stable coin can default, right? It really depends on underlying assets, the way, what they choose as underlying assets, but also the liquidity of the assets. So under stress, can they sell these assets to satisfy redemptions? And that's, for example, in our view, if there is a DPEG event on some secondary market, the stablecoin drops below the par, it doesn't mean it's a default. So what we would consider a default is that the issuer is not able to redeem a stablecoin, right, at par in a timely manner according to the contractual obligation that they have. So this is something that we would assess. But obviously, issuer would play an important role in the picture, right? So they need to manage the assets, they need to do the segregation and all that stuff. Another thing that people don't estimate, right, is that the business model of the issuer can fail. So essentially, can be a situation when they don't make enough money to sustain the operations, pay the fees, pay the salaries, and so on, right? So it may happen that at some point they just disappear, even though you have your assets safe, sitting somewhere in a good bank and all that stuff, but it can have a situation that you go to the issuer, try to redeem, and it simply doesn't work. So this is something we look into, and we see that stablecoins are actively used for transactions, for example, for tokenized funds, where investors use stablecoins to subscribe to the fund. So we assess these risks, right? And that's why we build the methodology to assess all risks around stablecoins.
So I think Christoph tackled that before. There's counterparty risk to having stable coins. And there's liquidity risk as well. But I feel that somehow they are becoming more institutionalized. We got the news yesterday that USDT is appointing a Big Four for their audit, being the biggest inaugural audit in history with the amount of assets under management that they, under custody that they have. And the liquidity is being tackled by buying short-dated assets. They are buying monetary market funds from firms of the likes of BlackRock, for example. So I feel that even though you still have the counterparty liquidity risk there, they are becoming more institutionalized and can be used for some purposes. Of course, not for wholesale settlements. I think Ponte, Sapia are doing a very good job there. And I feel they are going to be used for that purpose. But I feel that for retail, for some wholesale markets like big corporates and so on, cross-border payments, they can be used. And I feel that there has been a lot of rising demand for these stablecoins. And what I don't like about that space from an European perspective is that most of the demand is coming for US dollar stablecoins. It's true that the demand for euro stablecoins has multiplied by 5, I think, for euro coin, the one issued by Circle since MiCA entered into force. But still, it's, I don't know, 1% of the stablecoin market. It's very small. So what I'm most worried about as an European is that stablecoins can be used as a mechanism for the US dollar to strengthen and maybe the euro or other currencies to become less relevant in the future. Because it's actually stablecoin demand, we've seen kind of like a flywheel, right? A flywheel effect. So what we saw first is that, and it has been mentioned before, stablecoins were just used for settlements between exchanges, so just switching from one to another, arbitrage opportunities, and so on. But then they invested these underlying assets in treasuries. Those treasuries lowered the yields. And so I think the US government somehow saw that, hey, maybe these stablecoins are good so that we can get cheaper financing in the future. So let's make regulation for that. And they are doing that, right, with the Genius Act, Clarity, and so on. And so that will probably bring more demand to stablecoins somehow, bring more use cases to the US dollar stablecoin, lower the demand for other currencies, and most likely we could see something like the petrodollar or compute dollar that we are seeing now with AI, right, for the stablecoin market. And I think that with the regulation that we are doing, and we are very early with MiCA, and we have tackled stablecoins and so on, we should try and solve these problems with maybe getting to the private market and asking the question, how can I help you from a regulatory perspective to adopt euro stablecoins, enhance their demand among your clients? How can we make euro stablecoins attractive compared to US dollars?
Right. Thank you much. Since time is up now, I want to thank first for you, because you finally tackled the issue, what's the real world impact also at the macroeconomic sphere, what makes the system running, and also the threats to the real economy on the dollar focus. Thanks as well to all of you, and I enjoyed the lively discussion. We tackled 1.5 of these 10 questions, so it was very productive. So thank you very much. So we still have enough room for next time. Thank you.
Thank you.